Well, welcome to our weekly High Rock video. I'm Scott Tomlinson, and with me is my partner and colleague and the founder of High Rock, Paul Tepsich. We're going to chat about what we see happening in the global economy and financial markets and the world of wealth management and how we are adjusting our investing strategy accordingly. If you are watching for the first time and are interested in learning more about High Rock, please check out our website at www.highrockcapital.ca. Well, as you know, we have three models that we utilize to create our portfolio strategies. Last week was pretty tumultuous. We did pick up a little bit of a global equity ETF at the lows on Friday. Paul, have we been doing much in the tactical model?
Tactical, we did a couple trades. We sold out of a very, very tiny position that, quite frankly, became not even worth holding. We sold out of that. We added to, or we talked about it last week, but we actually put the trades through. Just yesterday, we closed off a purchase in Chorus Aviation. This is a stock that we did own for a while, and we sold back in October on that sell point around $8.84, I believe. This is a monthly dividend payer, so we did forego some dividend in this, but as you can see, it's traded off pretty substantially here, and we ended up buying, starting to layer in a position at around the $8.20 mark just over the past couple days. The reason why the stock sold off, you can see a gap down in, say, mid to late February, is the company did a bought deal, i.e. they issued equity in the street. The banks ended up buying it and distributing it, and that was at $8.60. And I don't think that distributed all that well. As you can see by the chart pattern, it gapped down and then it's been trending downward ever since. So I think it's getting cleaned up a little bit now in this $8 mark. So we will look to add to it opportunistically. We only have part of our position that I want to have on. The other notable changes we had, and again, we talked a little bit about it in the past, Scott, was in fixed income. Power Financial, we had a really good trade, and our existing clients or longer term clients will remember back in the fall of 2016, we owned some preferred shares. They were fixed rate preferred shares in our fixed income model. We sold out of those and bought these rate reset preferred shares. And as you can see on that buy point in, that was around early December. We bought that Power Financial rate reset at around the $13.60 mark. And it performed extremely well, especially as two things happened. Credit spreads tightened, which is good, and interest rates went up, which is good for that type of preferred share, rate reset preferred shares. With interest rates feeling like they were, to me, getting a little bit toppy, we sold out of that rate reset preferred share. We sold out of that around $22.75 just over the past couple weeks. And we ended up actually buying back into, from almost a year and a half ago, the same Power Financial, same issuer, but a fixed rate preferred share. So we had sold this one at $24.15 in early November 2016. And we were able to buy it back at $22.75 for the most part. They're good trades. These were deep value, deeply researched with our proprietary preferred share model. And one of them looked cheap and one looked expensive. So that's what we've done. It is tactical, even though it's not in the tactical model. It's in the fixed income model, but we are being extremely tactical and opportunistic on our views on valuation in these preferred shares.
Which is what we try to do, and as we talk about often, away from other equity market correlated assets, we're trying to find what we classify as non-correlated assets, non-correlated to what's going on in the equity market, especially because we think the equity market is and has been as expensive as it has been. We're finding other opportunities along the way, correct?
Yeah, absolutely.
Yeah. So as far as economic data last week, no real changes to the outlook for the U.S. Economy, which we've been monitoring fairly closely because of all the expectations that the tax reform and things like that were supposed to push a 2.5% to 3% growth rate. Right now, the expectations are about 1.8. Now, along with that, we've definitely had some economic or some stock market activity, not only on the back of the Fed raising rates, the U.S. Federal Reserve raised rates, but also announced last week that they were going to likely take a bit of a more aggressive approach to increasing interest rates into the future. Markets didn't take that too well. Last week we put up this little pennant chart, and then again on later in the week we also got the tariffs that the U.S. was to impose on China and China's retaliation, and that put the markets into even more of a bit of a frenzy. But it brought out more aggressive selling, and it took the market down to the 200-day moving average, which was in fact about a 10% from the highs, so a retracement of about 10% from the highs, and that again is what we market prognosticators classify as a correction. So we've had two significant corrections in the market in the last couple of months, and as a result, obviously, it's been extremely volatile. Now, as I mentioned, we did a little bit of buying on Friday when it hit that 200-day moving average, and it's bounced considerably since, but we still have a pretty significant downtrend that's developed with two very strong touch points, and it's really now we've seen some buying. Now, if the buyers can take it back up and test that line and break through, then it's definitely going to be good for the buyers. But if that downtrend line holds, in all likelihood, we'll see a bit more selling. And so we're keeping a close eye on this. Again, when we see buying opportunities that are a function of good value, we will pick away at it. We saw value get close to the 5-year average again late last week. So we think there's a bit of value there, but not a lot of value. We prefer to see it closer to that 10-year average in time. But again, this is what we're keeping our eye on as far as the equity markets are concerned, and the global equity strategy that we're taking is still very much geared towards being cautious, looking for better opportunities, but being really patient about waiting for them.
And Scott, it's probably fair to mention to our clients too, like this, when you get into periods of volatility like this, the market seems to be searching for direction, but the rallies or the up moves in the stock market can be extremely violent. As we saw yesterday, I mean, I think that's the most the Dow on a single point basis. That's the most the Dow's moved higher since 2008, like over a decade. And I think the top 3 move in the Dow ever in the history of it. So these are very, very violent swings, both up and down. And we will continue to watch the technical pattern to see if it really is in a corrective down mode.
Exactly. Yeah. We err to the side of being prudent at all times. Let's have a look at what's going on with the U.S. yield curve. As I said, we now expect the U.S. Federal Reserve to be a bit more aggressive, which means shorter interest rates are moving a little bit higher, longer term interest rates not moving up as much, and we're now pretty much at the flattest we've been at in quite some time in the U.S. yield curve, right? So, Paul, any comments there?
Well, actually, the only comment I would make, we show this chart quite often, but today we don't really have a single government bond chart to show you, but I can tell you anecdotally, the Dow is up 200 points, about just shy of 1% gain on the day. And you would expect that government bonds would be lower in price and higher in yield. But today, in fact, U.S. 10-year and 30-year treasuries are about 4 basis points lower in yield. So it's very, very strange behavior from the bond market. And Canada's even worse. You know, our Canadian stock market's up about 1/3% on the day, and yet 10-year Canada's are 7 basis points lower, and 30-year Canada's are 6 basis points lower. So, quite frankly, they're becoming less correlated, or the bond market is telling us something here, and I'm not 100% sure what it is, but it personally, I think, actually, I was just looking at it this morning, but I think we may want to add some U.S. Oil risk. I think there's a potential for war going on in the Middle East between Israel, Saudi Arabia, the U.S., and Iran. That could be one of the things that's going on with the bond market, and then the leader of North Korea traveling to China. Who knows what that means? But there's something going on in the bond market for sure when you see this price action on days like today.
So we're going to be watching very closely over the course of the next few days. Again, it's a long weekend too, so does that possibly bring into the is position squaring? Are people sort of maybe unwinding some trades here as well as we head into a long weekend with so much uncertainty around?
Maybe, but they also have had a lot of government in the U.S., a lot of government bond supply recently. So you would think that it would be going the other way. So again, I'm not.
Is that government bond supply a function? Are we expecting to see that continue with the increasing deficits that the U.S. is planning on running?
Yeah, for sure. But again, you know, the market knows that. Everybody knows that. So it may have been built in too much to the high side in yield, and they're taking it back. So.
All right. Well, for our clients, as you know, we keep very close watch on everything. And again, we will always err to the side of being prudent with our money and your money. So you can sleep well at night knowing that. All right. Well, that's it for this week. Paul, do you have anything else to add?
No, I think we discussed we're not going to create a video webinar for next week. I'm unfortunately or fortunately, I'm doing my civic duty and I'm on jury duty starting tomorrow. I'll be reachable for the most part, but it's likely to last into next week, so we won't do a video.
And it is the Easter weekend, so we don't think there's going to be a lot going on necessarily. But if there is, of course, and we feel the need to release a video, we can always do it later in the week if Paul's available. So, but that's it for this week. And on behalf of Paul and Bianca, who will be back to full time starting next week, and myself, we wish you a great rest of the week and a happy Easter to those who celebrate it. Back in 2 weeks in any event.